Hi, I'm Eric Rocks. I'm Managing Director of SS&C Technologies Canada. If you take a look at risk in your business, they come from a lot of different areas, but one of the big things when I talk to clients is trading risk. How do you mitigate, how do you get rid of trading risk? And what happens when there's trading risk? So causes of trading risk could be that you may be an insider with a firm. You can't buy any more of the software or any more of the stock in your firm. So how do you stop that? You could be over a 10% holder, or you may be in a position where you don't want to have any sin stocks. You don't want to buy any tobacco or anything like that in your portfolio. So if you can automate that, and if you can make that set up so it's clear across the platform and ensure that you minimize the ability for trading risk to happen, that really is how we do it. So what we do is we have a really strong compliance engine built into our platform, and that compliance engine fires on many different cases. When you want to model and you're thinking about, hey, what should I invest in for you? Should I maybe go and rebalance my portfolio? And you would think about these trades. That's what we call modeling. So we have a pre-trade compliance capability that says, let's think about this. Can I even think about doing this? Does this really fit with your investment strategy? Then we actually have a compliance component that actually says, when I send that information to marketplace and when I actually release that out to the market, am I gonna be okay? Because what can happen between the time that you think about something and you actually do it, prices may change, things may happen in the marketplace. So you may want to check that again. So we do check that automatically. And lastly, we do passive compliance, things that happen after the fact. So you've made your investment, but are you in alignment with your firm-wide guidelines? Do you need to report that to anybody else? So we actually have those 3 firings of compliance, and that really reduces trading risk across the board. So that really makes a big difference for our clients. GWP has been enhanced for socially responsible investing by working through the compliance engine primarily. So the compliance engine really has that ability to split out what a client wants to invest in, not only from an investor policy statement perspective. So if you're taking a look at where I should be balanced in terms of how much I should have of blue chip versus bonds or whatever it happens to be, we have that capability built right in. But there may be other areas when you take a look at asset classes. So we have an unlimited number of asset classes that we can work with in the system. So you can go to any level of granularity, and we can then bifurcate that information and run compliance against it. So it could be something as simple as no sin stocks, or it could be I don't want to be invested in the Middle East, or it could be I don't want to have any investments that have to deal with auto parts, for example, because you don't think that technology is going to go where it should go. So what you see is that having that capability to take the asset class structures, the investor policy statement, and compliance, and put those 3 things together really makes a big difference in terms of how we can control where your investments are going.